Greetings, members one and all of the Salivation Nation. Wells Fargo really likes silver and platinum too. Should we listen to them? They're saying that gold is too pricey. So let's explore. With gold's impressive rally this summer, prices might be too pricey for some investors, which is why Wells Fargo is advising clients to buy cheaper precious metal alternatives like platinum and silver. So very interesting. Wells Fargo, as we know, is kind of a tainted reputation as of late. They're a big bank, and we've heard this before from precious metal investing, quote, advice from other companies like big banks like Goldman Sachs and others. But let's take a look and see what this is about. Gold has had a great run over the last year, up 17%. It's been a perfect storm of sorts for gold, especially on the interest rate front. With long-term interest rates declining globally, gold has been an attractive alternative to debt. Wells Fargo head of real asset strategy John LaForge wrote on Tuesday. Gold is a great alternative to any kind of risk, including economic instability, you've heard me talk about that, and geopolitical tensions, noted LaForge. But at these levels, gold is just too expensive, he added. Just an example, the 10-year German bond now yields negative 0.44%. Investors now pay to invest in German government debt. The advantage to holding gold is that it is a country and government agnostic. Although I tell you what, you ask most central banks and they will tell you that they are not agnostic towards gold. They're raking it in, especially China, Russia, Turkey, and others, India. Gold can sometimes be viewed by investors as a hedge against the governments that might be fiscally, economically irresponsible. Well, I don't know of many first world countries that aren't at this point. LaForge said in a note to clients, at $1,425 today, though we feel that gold is pricey. Actually, it's much higher than that now. Everything and much more has been priced into gold at and above the $1,425 an ounce level, which is why Wells Fargo is not advising to buy. Yes, the world has added more negative yielding debt recently, and more will likely follow, but $1,425 gold, we feel, takes into account all of that and then some. 1 year ago, just prior to global yields falling, gold was trading closer to $1,200, LaForge wrote. Platinum and silver offer much more advantageous hedge solutions to investors, added the bank. The two we recommend considering are platinum and silver. Both are historically quite cheap versus gold. In our opinion, may offer much more upside potential should gold keep grinding higher. Here we see the gold to platinum ratio, and we can see that it was only until around the financial crisis where platinum took a big drop on parity with gold. And really, it's been trading right around the levels of gold until 2014. But historically, it's been higher for the most part, dating back from 1999 or so. But I guess it was a time back in the 90s, in the mid-90s, where it was on parity with, but rarely got below gold. Here we see in 1985 or whatever did get below gold here, or 86 perhaps. And so very good. Gold to platinum ratio is at its widest right now. So very cool looking at this chart. That's quite fascinating indeed. Platinum is Wells Fargo's top pick at the moment, with a lot of upside potential in comparison to gold. Actually, I do agree with that. The price of platinum has mostly traded above the price of gold, but that has not been the case today. For those looking for an alternative to gold, we recommend consideration of platinum. The time of the writing, December COMEX gold futures were trading at $1,483.70, up 0.49% on the day. September silver was at $1,644, up from 0.29% on the day. And October platinum was $853.80, down 0.48% on the day. So very, very good. Well, let's take a look here at the prices for platinum. Platinum is down $2 here as of the recording of this video. Let's actually refresh this here, and we see that gold is still up today, even though the markets have somewhat recovered, at least some of their losses today. Silver is up 6 cents, so it's at over $16.50. But gold is the biggest mover, other than palladium. Palladium is now up $20 with a 1.43% movement. Rhodium moved $30 today, so very, very interesting to see rhodium take a move here. But nonetheless, the silver price forecast. Silver markets find mass buyers. Silver markets initially, this is from FX Empire, initially tried to pull back to kick off the week, but ran into enough support underneath to turn things around, formed a very bullish candlestick. By doing so and clearing the $16.50 level, it looks as if we're ready to break out given enough time. Although I'm very cautious in being bullish on silver compared to gold. As the last article says, it'd be wise to invest in silver. Platinum I do agree with, and more so with platinum because of its properties as a commodity as opposed to money. And as a precious metal hedger, it's more of an industrial metal. It is the fringe precious metal, and that does provide some support, as it is obviously coined, and you see that many places you can buy platinum as bullion widely, and you have been able to for quite some time. And I am relatively bullish on platinum and hope to maybe get some more this year. We shall see. But more as kind of a hedge against and maybe looking for upside potential as an investment. We shall see. But silver, I don't know that I'm quite as bullish, even though the silver prices have started to move up with gold now, although not at the same rate as gold, as we saw here. The potential movements on a percentage rate is moving less than gold. And right now, with gold moving up, by now we should have seen silver play catch up, or maybe even surpass gold. And I don't know that we're going to see that per se. I think it'll continue to move up with gold, but not at the same pace as gold. And so that's why it is still a good idea to buy it, because it's going up in price. And it could continue to climb if things, but will it surpass gold? I don't know. I've talked about that and posted videos outlining opinions from others who have thought that it could possibly surpass gold in terms of the rate. Basically, that means that it would tighten up that ratio. The ratio between gold and silver would tighten up, maybe get below 80, potentially get below 70. But I think we're quite a ways from that happening. And I think it's going to take literally a whole lot more movement in gold before it moves it upwards. And because of the central banks holding gold and acquiring more of it, I believe that is one of the reasons why we're seeing gold continue to climb. And it's precisely for that reason why there are some in this analysts who say that silver is consumed and gold is treasured and hoarded. And so because of that, silver has much more upside potential. But it's precisely for those reasons why I think the actual opposite is true. Because silver is consumed as a commodity, you see less people looking at it as a hedge, or as the same way that they look at gold. So what does that mean? That means that it's going to take a while. There'll be a delayed reaction before we see some movement, especially in the physical markets. Now, most who watch this video, that are watching this video, are silver bugs or are bullish, and there are stackers out there. And I'm with you. I'm still accumulating some silver too, in terms of pieces that are like for collectability, but I don't really stack the metal. So I'm not really changing much of my habits other than spending less on silver and more on gold. And I will continue to do that even as prices go up. And I do believe there's ways to buy fractional cheaply or less expensively if you keep your eyes peeled. There's many more opportunities now than there were even 10 years ago on the online markets to get some good deals. So that's the thing. But moving on here with the silver price forecast from FX Empire, they think it's going to break out. They initially pulled back a little bit during the trading session on Monday, but have found buyers underneath to turn things around and break above the $16.50 level during the early trading in North America. However, we still have a lot of resistance near the $16.60 level. So he is thinking that it's going to be a significant amount of momentum to finally break out. That being said, the author believes, thinks it happens, and I think it's only a matter of time before buyers get rewarded. The $16 level underneath continues to be a major support level, as it is an area that is a large, round, psychological significant figure, and of course, the area has already proved itself to be supportive over the previous two candlesticks in the daily chart. You know, the technical analysis of this stuff, there's a lot of ways that people can kind of, pick this apart based off of what the trends are and what's been happening and the movements here and there within the last 5 minutes to the last 5 years to predict what's going to happen in the next 5 minutes or 5 years. But it's very difficult. I'll never really get into that because you can spend a lot of time making inferences based off the technical data that may not necessarily pan out and typically don't for many ways. But nonetheless, there it is. So post your thoughts below. Fascinating stuff indeed. It does look like, that the Wells Fargo is bullish on silver and platinum. So I'll be curious to see what your thoughts are on that. Would love to extend, in fact, I would really love to extend a multitude of gratitude to you all for watching. It's much appreciated. And by the way, just so you know, as you probably most of you have seen in the description and also in there's a little panel where you can see the merchandise, the t-shirts, mugs, that types of thing. If you're interested in any of that, that's there at your leisure if you so desire. But I'd like to extend more thanks to you all and encourage you to please rate, share, comment, and subscribe.